And the U.S. Federal Reserve has announced a pause in rate changes, holding its benchmark lending rate steady. The decision, made unanimously by policymakers, comes amid growing uncertainty over U.S. trade policy.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Fed Chair Jerome Powell cited significant risks from recent tariff actions, highlighting potential challenges to central banks' dual mandate, managing inflation and supporting employment. Despite volatility in trade, the Fed noted that solid economic activity continues, supported in part by a surge in imports ahead of the new tariffs.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
President Trump's recent tariffs rollout has introduced new economic risks. In April, the administration imposed steep tariffs on Chinese goods and baseline tariffs on most other countries. This triggered weeks of financial market volatility and a temporary spike in imports. The Fed acknowledged these developments, warning that higher import costs could fuel inflation, while trade disruptions may raise unemployment and slow growth. Economists now expect short-term economic contraction and reduced momentum through mid-year. While markets had anticipated possible rate cuts this year, analysts now predict no move before September, citing the 90-day pause on reciprocal tariffs. Fed Chair Jerome Powell reiterated the central bank's independence, stating that public criticism, including from the president, would not influence monetary policy.
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Powell emphasized that decisions will continue to be driven solely by economic data and risk assessments. For now, the Federal Reserve is choosing to wait, monitor trade developments, and hold policy steady. For latest news, download the WION app and subscribe to our YouTube channel.